So one of my YouTube subscribers sent a comment. In that comment, he asked a very interesting question. He asked that there are a lot of stocks these days which are forming cup with handle basis. These are early stage basis because when the market goes down, stocks go down along with that, and a lot of stocks are forming cup with handle basis and they are breaking out of those bases. But if you check the daily time frame chart of these stocks, you don't have the blue, green, red combination. When you check the daily time frame chart of these stocks, the 50 day is not above the 150 day and the 150 day is not above the 200 day. That blue, green, red combination we are not getting. So, as per what I have been teaching, I have been encouraging students to avoid such stocks because they are not in a confirmed stage 2 uptrend as per the Mark Minervini trend template. So here is an example of why I am saying that so that I can address the question asked by the subscriber. So this is CAM's weekly chart. We can discuss this chart because this is an old chart. This is 11 September 2023. The breakout came on 11 September 2023 week. So I'm just showing you the chart before the breakout. Okay. Now for this 11 September 2023, I will show you the daily time frame chart. So this is the daily time frame chart. Okay. This is 11 September 2023. Look at the blue, green, red. You have blue, red, and the green. The red value is 2239 and the green value is 2236. So instead of blue, green, red, you have blue, red, and green. Not acceptable as per the Mark Minervini trend template. So I wouldn't buy this stock because it does not meet our criteria. That is number one. Number two, you will notice that a lot of such stocks which form a cup with handle at the bottom after falling with the market, a lot of these stocks are going to have poor relative strength. Here at this week, this stock had a relative strength of 42. Okay, and we only look at stocks with a relative strength of 70 or more, relative strength rating of 70 or more, preferably 80 or more. A lot of my subscribers are also confused between the relative strength index and the RS rating. I have told you countless times, do not use the RSI for this particular system. It has no utility. In this system, the only thing you have to master is price and volume. So don't look at relative strength rating. Sorry, don't look at relative strength index because it is an oscillator, it is an indicator. Relative strength rating is a different proprietary parameter in which is only available with MarketSmith. Okay. So you see this cup with handle. I will draw that cup with handle for you from here like this. Sorry, this became very deep, but you see that's the cup with handle, correct? I will remove this. So you have a clear buy point here, the high of this bar, which is 2545. So I will draw a line there. 545. That's the pivot point. So this is 2545, 2544. So 2545.20. That's the buy point. Okay, and you see what happens. It breaks out. But if you draw a 10% line below this, what is 10%? Sorry, 8% stop loss below that. 2545.20 multiplied by 0.92 is 2341. So 2341, that's the stop loss, which is 8% below the pivot point. Look what happens. Remember, relative strength 42 doesn't meet our criteria. No blue, green, red on the daily time frame chart doesn't meet our criteria. Okay. Relative strength itself is more than enough to reject this stock. In fact, you don't even have to reject this stock because it will not show up in your filter in the first place. So the beauty of this system is that it will automatically keep you away from traps in the market. So this was a trap. If you notice, if I advance the price further, that's it, you are done. See, the stop loss is hit. The stock hardly moved up. This is the problem with poor relative strength. See, the stock hardly moved up 5%. Broke out of the pivot point, went up 5%, came down, closed below the moving average, closed below the pivot point, all negative signs. Hit your stop loss, that too after, how many weeks? 1, 2, 3, 4, 5, 6, 7 weeks, 6 weeks. So you found yourself stuck in the stock for 6 weeks, which is 1.5 months, and you still did not end up making any money in the stock. So you lost time, you lost money, correct? You don't want to do that. So relative strength 42, complete no. And on the daily time frame chart, the moving averages were not in our favor. Probably after the breakout, they came in our favor. See, let's see when did the green line cross this red line. Okay, let's move the price forward. So let's see when did it cross the. I'm checking here. Okay. So I think on this day, no, not that day. On this day, yes, on 15th of September, you notice the green value is above the red value, 2247, 2246. Before that, the red value is above the green value, correct? So 15 September is the day when the moving averages turned. So 11, 12, 13, 14, 15. So 15 would have been a Friday. Okay. On Friday, the actually the green line went above the red line, which means you had to wait for a close of Friday before the stock became eligible. I'm assuming you're not considering relative strength rating. Okay. But you had to wait till 15th of September 2023 before you could consider the stock for purchase. Okay. Now, in this case, the week ended on 15th of September. So, first you have to wait for a close. Now, once the stock has closed, you have this week, correct? Now, let's draw a 5% line above this. So, 2545.20 multiplied by 1.05, 2672. So, 2672. Yeah, you see, now when the Friday closes, you could think of buying the stock next week because the price is still inside that 5% buying zone. You could think of potentially buying the stock next week because now your price is inside your buying zone, which is that blue zone. Okay, it has broken out on high volume, and the week ended on 15th of September. So 11, 12, 13, 14, 15. So next week you could have bought the stock here when it became eligible on the daily time as per the daily time frame chart. But as I have told you earlier, the relative strength rating, even after this bar, it went from 42 to 51, 51 or 50. I checked the market Smith chart. So even in that case, the stock wouldn't show up in your filter. So our orange trading system filter automatically keeps you away from these traps. And notice that the stock bounces off these uh, highs. So there is a resistance, there is overhead supply here. In fact, there is a lot of overhead supply here. Okay, it is a complete disaster. You are not buying this stock at an all-time high. Okay, preferably if this pattern would have formed somewhere near this and if this was broken, then the chances of the stock coming down are low because the stock does not have overhead supply. So, what's the moral of the story? Two things to remember. Make sure you never buy stocks which have relative strength of less than 70. Make sure you never buy stocks where on the daily time frame chart you don't have the blue, green, red combination. Okay. Very simple criteria. I cannot give you a criteria that is as simple as this. Okay. So if you have any doubt as to whether you are missing these patterns, and now I think the doubt is clear, you are taking too much risk if the blue, green, red criteria on the daily time frame chart is not satisfied. I am not saying don't take the trade. I am saying there is too much risk in taking the trade. You can do whatever you want with your trading portfolio, but I am just warning you. If you try to cut corners, if you try to violate basic non negotiable criteria, this is what can happen with you or your portfolio. Okay. And this is not good for your confidence. So stick to stocks which preferably set up on the daily and the weekly time frame simultaneously. That's when you are putting the odds of success in your favor. Thank you so much.